do you build a habit-forming product?
You need to invest.
And we saw these
You
different...
don't just gun for revenue in the door.
This is Churn.fm, the podcast for subscription economy pros. Each week, we hear how the world's fastest growing companies are tackling churn and using retention to fuel their growth.
How do you build a habit-forming product?
We crossed over that magic threshold to negative churn.
You need to invest in customer success.
It always comes down to retention and engagement.
Completely bootstrapped, profitable, and growing.
Strategies, tactics, and ideas brought together to help your business thrive in the subscription economy. I'm your host, Andrew Michael, and here's today's episode. Hey Priya, welcome to the show.
Thank you so much, Andrew. I'm excited to be here.
It's great to have you. For the listeners, Priya is the CPO of Recurly, empowering brands to launch, scale, and optimize subscription experiences that turn customers into loyal communities. They're trusted by innovators like Twitch, PupBox, Sprout Social, Pipedrive, and more. And prior to Recurly, Priya was the VP of Product Management, Growth Monetization Risk at Bricks, and a Director of Product Management at both Facebook and Commerce and PayPal. So Priya is also an advisor for Foundation Capital. My first question for you today, Priya, is what has kept you in the FinTech space throughout your career?
I think moving money moves the world, and there's a lot of innovation still to be had, believe it or not, even after multiple decades of innovation and growth in FinTech. And so I've sort of enjoyed that opportunity to try new things even within that space each time I make the move. So that's what has kept me here.
Yeah. Whose motto was moving money moves the world? Was it in one of the previous companies? It sounds like a brand slogan. No.
I just came up with it.
You just came up with it. Okay. Yeah, it sounded like a PayPal thing or something like that. But very nice. And so you joined Recurly about a year and a half ago now.
Yeah.
What's the experience been like? What are some of the challenges like you've been excited about tackling since joining?
Yeah, Recurly has been around since 2009. They are a well-known brand in the subscription economy. The exciting part for me over the last year and a half was to, how do we move from, what we are already building for our merchants, helping them grow with their subscribers into a more agentic future where we can set subscription growth on autopilot for our merchants, particularly given the current environment of more fiscal responsibility. So that's been an exciting shift for me. Like, how do we move into this AI era as a company that was built in 2009?
Yeah, I think specifically in the payment space, like this is one of the biggest areas where things are evolving quite fast. I think entire models are shifting and changing. I think the traditional SaaS models moving more towards a usage-based pricing model. I think There's a whole bunch of shifts and changes, which I think a lot of that is actually what we'll be chatting about today. Recurly regularly comes out with their state of subscriptions, and the 2026 report would have been released by the time this episode comes out. So we're getting a sneak peek, but it might be a little bit late on that. But excited to chat through a little bit about that today as well. Maybe just going question on that, what has been one of your most interesting findings so far with way things are changing when it comes to subscriptions and payments and with this new AI boom? Is there anything that's really stood out to you that you I wouldn't have expected that, but it makes sense now that it's happening?
I think just customers or subscribers' acceptance of subscriptions managed through AI or AI usage has definitely drastically improved, particularly given all of the consumer adoption of large language models through ChatGPT, Gemini, etc. And so we are envisioning a future where AI recommendations can directly go into a subscriber merchant interaction experience that can then make it easy for the subscriber's intent to come through. So in our State of Subscriptions report, which is, an annual data-driven industry report that we publish that serves as benchmarks for the subscription economy, one of the key findings we found is that the pause, where previously merchants used to think of pause as, hey, that's churn, I need to prevent it, but it's more of a tool in their tool set now where subscribers are expecting that pause and those actions can be intelligently offered at the right moments. If there's not enough engagement, for example, you can proactively offer a pause so that it doesn't result in a cancel. So there are various ways in which we can apply the new set of actions based on insights and data that we have.
Yeah, I think it's very interesting as well, specifically around like the usage-based pricing. And now, like if we think a lot of like the prosumer market, I think where like some of these LLM models are operating within is that there is a lot of periodic use now of software, whereas in the past we used to try to sell this ongoing nature. Now it's like really about like what are the results being delivered, and you don't always need those results. And it makes sense that you'd see a lot more of this activity happening with people wanting to pause and then come back when the time is right. And something we faced, I think, at Hotjar, we noticed a lot of reactivation. And at some point, like it became a significant portion of the business was the reactivation revenue, just due to this like periodic nature of people pausing and coming back. And are you seeing anything interesting that customers are doing now to really focus on re-engaging that audience to be able to reactivate and bring back those paused customers? Like, what are some of the interesting things you're seeing customers explore in the space?
Yeah, I think previously it used to be all about acquisition, but we are definitely seeing a lot more focus on retention and retention strategies through engagement. Recurly also has a product called Recurly Engage that specifically helps with that. The thing that we see there is how do you understand subscriber behavior on your app? What are they trying to do? And provide timely engagement experiences that then allows you to retain them. So one example is as they are moving to cancel, you can understand their lifetime value and say, okay, this subscriber likely will go hit cancel right now. Maybe I preempt that action with what we call a prompt, just prompt them in the right moment to say, hey, if I give you 50% off, you can stay on for an additional 3 months, 6 months, etc. That will then help them retain on the platform. The other trend we are seeing is also one of micro subscriptions, if you will. So weekend passes to a game or for a very short period of time, help them understand the benefit of the platform so they can then subscribe to longer term plans once they see the value. I mean, even our family, right? Like we have a Tesla, FSD prompts keep coming up. Hey, do you want to try FSD this weekend? And once my husband tried it, he's now never going back. We are paying that monthly subscription. So I think those are interesting ways to get subscribers introduced to new offerings and then drive the engagement from that and then help retain or grow or expand with existing subscriber base.
Yeah, I think that is very interesting. I think like actually I was looking yesterday at Tesla and going to go back to my my search because I'm also busy looking for a new car. And I think unfortunately though we don't have FSD in Cyprus. But the thing that you mentioned now I think makes a lot of sense in the context of AI now specifically as well, because previously in the past like the costs to offer free trials were relatively low and minimal. But now since we've introduced the LLMs and there's this like direct cost associated with delivering the service, which is exponentially more than it was in the past, it becomes restrictive now to be able to actually like give that free trial and that offering. And so what are some of the interesting ways you're seeing people create these trial experiences? So like you say, in Tesla's case now, this is popping up, try things out for the weekend. I'm assuming that's also a paid trial. Is it a paid trial for the FSD?
Yeah, I mean, it's like, FSD, no, it's a free trial. Like you could try it and then you can then subscribe to the monthly. But we are also seeing, like, for example, Amazon Prime has a pay-per-view, right? Like you could see a particular show on a specific channel that you want, but pay-per-view for that show. If you enjoy it, then you can buy one episode and then you can then expand further. There are interesting models that come up like that. And healthcare subscriptions have seen a substantial growth over the last year on our platform. And we see those models apply there as well. You're not sure if if a particular supplement is going to work for you. You don't want to sign up for an annual plan in that case. You want to start with like a smaller micro subscription, see how that goes, and then have the opportunity to then grow into a more longer term plan. So those are all things that merchants are thinking of right now, specifically in particular industries. Digital media and entertainment, for example, is already saturated with so many different channels. And so that's one area where just offering a micro subscription can help retain subscribers more actively.
I think the things are evolving again as us in the space. I think one of the things I've also noticed, like there's this commentary on LinkedIn, and like I'm not sure I buy into it yet myself either, but there's this idea that we've seen this rapid growth for AI startups, and then everybody will start to challenge what churn and retention looks like on the back end. Like the harder they the faster they grow, the harder they fall, or whatever it is. Like I've seen many people commenting on this, and I think like, what are you seeing actually in reality in the data as well? Like these hyper growth startups that we haven't seen in the past, are you seeing like extraordinary levels of churn? Or is this just something that is chatter on LinkedIn that people don't really have a good settled point on yet because it's way too early still to like come out with concrete data?
Yeah, I think what we're seeing is, subscribers have sort of a mental limit on the overall number of subscriptions that they want to use. And so we've seen that like 51% of subscribers canceled at least one subscription in the last 12 months. So given that, yes, churn, is a significant problem, but that's where if you showcase value and you consistently engage them based on the prior usage and net new functionality that you want to offer, we're seeing that win back campaigns are able to retain them. So in the AI world, definitely like there are many, lookalike services that come up. So the important thing is, how do you differentiate yourself in order to both retain and win back? That becomes important.
Yeah. And I think more so now as well that it's become so cheap to build the things, and the number of competitors is like exponentially growing now, because anybody who was previously like a PM or designer,
agent,
exactly, they can just start to generate sales agents is one thing. Like my inbox now, like I used to read some of it, now I've just given up on it. I just scan for keywords. I used to try pride myself in replying to everybody that reached out. Like now there's absolutely zero chance like that's happening anymore. And so I think this is happening though across all sectors of software and many different spaces. And so I think one of the things you have in the study is talking a little bit about like the top factors that are motivating loyalty, because I think loyalty is going to be really important and key thing for people to start thinking about, like when there can be abundance of competitors, like what's really going to make you stand out, because it's almost no longer really going to be the software. To some extent, you can maybe argue that the UX is going to make a difference, but I think that like edge will slowly erode as well. So what were some of the things you found within the study that you found interesting when it came to like driving customer loyalty and motivating it?
Yeah, I think the key things that we found were around transparency and very clear billing practices, not being surprised later you signed up for paying X, but you find out that everything said and done, you're paying X plus Y. That definitely turns subscribers off. Having personalized content, personalized engagement that drives loyalty. Ease of cancellation actually drives loyalty, particularly because subscribers are now actively managing the total dollars spent on overall subscriptions. And so if you provide a way to easily pause or cancel, then that subscriber is going to come back over the long term, versus if you make it so difficult that, then they're like, I need to find a way to get out of this. So yeah, those are some top 3 things that come to mind.
Yeah, I think it's no surprise. I think in terms of like transparency, I think that with transparency comes trust. And I think like that's trust, I think, is going to be a critical element that people need to know. Okay, like I can trust this business. They're going to be around. They're going to be the ones that are going to be able to deliver the service, because like, I think if there's just new competitors popping every day, you don't really have a good sense and understanding of like who is actually legit, who's going to be there. So like any business you can see that's really like following best practices when it comes to transparency, ethical, and that's like will stand out and have an edge in the market. Nice. And then you mentioned already, like, was it 50% of consumers have canceled the subscription within the last 12 months to be like 1 to 2. These tend to be like lower priced subscriptions as well. So I'm wondering like how much difference did you see in the data when it comes to the price of the product, and then if reasons change as a result of that? So in the study, you have like a generic reasons for cancellation in the last 12 months. And I think like the top point, I was not using it enough. Do you see this consistent across like the price of these products, or with any variances like with the really cheap prosumer prices versus like a high-end subscription, maybe a B2B SaaS company would be doing?
Yeah, this is predominantly in direct to consumer, price range between anywhere between $5 to $19.99. That's where we predominantly see this behavior. And I think this presents a very clear opportunity for businesses to improve early engagement for subscriptions within this price point and personalize some value delivery and then drive some usage-based retention programs. So you see somebody sign up first 3 months, not much activity, then you want to put some either offers in front of them or some way they can engage with your product better. And that would then drive the retention versus an early cancellation.
Yeah, absolutely. The one thing actually I found interesting going through the data itself as well was the average monthly customer churn rates. It's actually on the page 16, I think, of the 15 of the report. You have a quote there as well, looking at it now, is that education customer churn rate decreased for education businesses, which I found that, at least in my mental model, a little bit counterintuitive, considering that and the knowledge abundance now with ChatGPT and the likes, and seeing like a lot of the education-based publicly traded companies really like taking a big hit in the market. Like, why do you think this is happening where this is decreasing for education? Across the board, there's a couple of other ones like digital media and entertainment decreased slightly. On aggregates, like I think the only space where we've seen an increase really is healthcare. And I would have expected to see more churn across the board rather than like less, just due to the obviously now number of players entering the space and then more abundance and choice. But maybe first one, like, why do you think education specifically? Because that's the only one that's really had like a decent level in reduction on aggregates.
Yeah, it went down from 6.1 to 5.7%. I think the reason could be that the edtech companies are figuring out added value on top of just basic prompting and respond, where it's also validated content. Like if you're providing a subject matter expert who's delivering content versus you're not sure if the AI is hallucinating a response back to you, I think that might be driving this reduction as well. That's just my guess, honestly. We might have to dig further into the data to understand specifically which education sector companies and what kind of programs or offers they have.
Yeah, for sure. So from us, I think it was like, what has been like the most surprising stat that you've come across in the study that you didn't expect to find?
Yeah, I think the most surprising thing is, the normal notion is that churn is bad. But what I think would be a good takeaway from this is sort of selective churn. It sort of reflects stronger consumer intent and not fatigue. And so customers or merchants should use this as an opportunity to provide the easy cancellation, the pause, all of the earlier aspects that we spoke about, and not think of churn as goodbye. I think that's top of mind.
Top of mind, yeah. I think as well, like I feel as a consumer, this is true to me as well. Whereas like I've started to use maybe more services. I tend to like cancel the services, but I'm much more willing to go back to them as well when and as needed. So I can see, and I see that as a pattern amongst like colleagues and friends as well. And so I think that's going to be like definitely an interesting challenge and space for people to figure out next is like, how do you handle this periodic nature and how do we like still retain relationships or maybe not retaining business with these consumers and customers going forward?
And the pattern we saw also is that churn rate might increase maybe during the holiday period, October through December. People are, they want holiday
time to
spending money, so they're trying to cut back on something else. But then it actually picks up back in, February through April. So that's the time when you should be moving forward with retention programs or engagement programs or win-back campaigns, knowing that this periodic cycle is a pattern.
Yeah. No, I think that is interesting. I think it's also like you have more time at the end of the year to like actually reflect and say, hey, like, why am I spending all this money on here?
Yeah, exactly.
I have too many of those. But yeah. The other thing I think was interesting, like going through it, was just taking a look at the transactions by payment method and how much they differed when it came to EU versus US. I think the biggest thing that for me stood out was like EMEA is much more prevalent PayPal than the US was, and I wouldn't have expected that. I thought it would have been the opposite. So knowing your background, like, why do you think that is? Like, why do you think PayPal is so much more prevalent in Europe and Middle East as opposed to the US?
Yeah, I mean, we've definitely seen a higher adoption of alternate payment methods like PayPal in EMEA. I think PayPal represents trust, right? So it's a very, very high trust brand. You look at that orange button, you don't think about you're going to get defrauded or your credit card information is going to get stolen. So I think that sort of expands further into how subscribers maybe think in the European market. Like they want high trust. They engage more with high trust brands. And in the US market, credit card has been high trust in subscribers' mind by default. Just the usage of credit card has been so prevalent that constitutes high trust. But I think in EMEA, debit has always been number one. And then apart from that, PayPal. I think it's due to the trust factor.
Trust, yeah. I think in the US, you also have like a much more robust like credit card reward system where we have it here, the concept here in EMEA, but it's not like as relevant where like people live to get credit points and things in the US.
Yeah, I mean, the other factor could also be that the rewards can be offered in the US because there's interchange fees in the US, whereas the interchange fees are like very minimal in Europe.
Yeah, the other thing as well, reading it, which stood out to me, was that there's a higher prevalence, if I read it correctly, of alternative payments such as like Apple Pay and PayPal in EMEA, but they tend to be good for initial transactions, but then they carry like a higher renewal decline risk. Like, could you speak to that a little bit? Like, why would something like an Apple Pay or PayPal have a higher like risk of decline over a credit card, debit card?
Yeah, I think with Apple Pay and PayPal, the reason might be that if you in the background switch, these are wallets, right? So you could have multiple cards in those wallets. If you switch from a default card, one that you used initially for the initial sign-up transaction, and then your wallet default card has switched, maybe that doesn't have sufficient funds, then there is a higher chance of decline. Whereas if you have put down a particular credit card that then continues into the renewal transactions on the credit card side, then there is a higher chance that the authorization will go through because it has been already authed for that amount earlier on. So, that's could be one of the reasons why the renewal declines, just because those are wallets and the payment methods in the wallets can get added, removed, and then maybe that's not the right one for that particular subscription renewal.
Yeah, it's interesting because you might like run an experiment. Let's say, okay, let's introduce PayPal to see if we increase conversions. Great success, but without even realizing you're really impacting churn or retention on the other end, and that's something you'd only see like whether it's 30 days or 12 months from then. But having access to some information like this.
Yeah. This is where products like Recurly then come in handy quite a bit, because then we have the right retry mechanisms. We understand, okay, we can try a different payment method within that wallet. We can try other payment methods that the subscriber might have vaulted with us. So different times of day, various ways that we could try the retries, as well as we have, dunning campaigns where it's a follow-up process. And to update a payment method, maybe the subscriber could then at that time then go back into their PayPal wallet and make sure the right payment method is the default one. So those are all options that Recurly does in the background for our merchants, so they don't have to worry about leaving money on the table.
Yep. I was going through, I think that's like most of the points that you hit on the next slide in the report. So I think from like Recurly's standpoint, well positioned, obviously, to help solve some of these challenges. Chatting as well to Dan last time, I think like it's one of those products as well that not necessarily going to solve like the underlying causes for churn or retention in your business, but will like solve all the low hanging fruits, the stuff that you shouldn't even have to worry about to begin with, like the involuntary churn that's happening that can have really big impacts really fast, as well, introducing something like that.
And for voluntary churn, we introduced a new product this year called Recurly Engage. That's where it can help you with the cancel save flows, just bringing the right intervention at the right time to your subscribers.
Yeah, cool. And then the other, maybe last one to touch on, I think, before I dive into, because we don't have one time, is that another interesting thing that came out was that 78% of merchants are now offering a monthly and annual plan. But again, this is like maybe one of those things where at the service level looks great, but then what's also being seen on the other side is the renewal rate was dropped from 82% to 23%, 82.9 to 23. So that's quite a significant drop on annual renewals. Like, what do you think is driving that? Like, I think I could have a lot of different assumptions of why this is happening, but maybe you have more context on the data behind it.
I would say that having both plans is an absolute must, right? So that you can bring in subscribers who are of the mentality of try before you buy, or shorter term and then see the value and then expand to long term. The annual subscription, the renewal moment definitely is the point of churn, right? And merchants should understand that. And that's when they have to really highlight the value that you've derived from it over the last year or so, and why continuing to stay on is important. And that's the moment where they can craft the right offers to keep the subscriber on the platform. I would say, given that it's a point of churn, this is where offering downgrade paths is going to be important, where instead of saying, hey, renew for another full 12 months based on their engagement and usage pattern of the service, you could say, hey, we see that you haven't actually used as much. And this is where transparency and, being straight with your subscriber can really help. You might actually want to try this smaller plan. I think those types of offers could really help with that at that renewal moment.
Yeah, I think I've seen some other brands as well where they actually end up like canceling subscriptions for their customers and say, hey, you've not been using this, like here's your money back, even to some degree. And that's almost like, other people's like, why are you giving me my money back? I don't want my money back. Like, just take my money. So, but I read it wrong, so I want to make a correction as well, that it didn't drop from 82% to 23%, but it's just the rate has dropped to 82.9% annual renewal on aggregates, with only 23% of failed renewals recovered. So that's like, it's becoming harder, but not as bad as I thought it was. Yeah, in my mind, I was thinking as well, because I think there are like a lot of services as well now where they're offering really competitive deals to switch to yearly. But then as well, like a lot of people may be taking the deals, but then realizing, okay, like just not using this service anymore, and there's a new service and stuff. And with more competition, I think that could lead to the reason. But anyway. What's one thing that you know today about churn or retention that you wish you knew when you got started with your career?
I think I touched on this earlier, which is don't treat churn as goodbye. Those subscribers are still yours to win back if you put your heart and mind to it.
Very nice. And then a question, maybe because you've obviously been in the payment space for a long time now, you've probably advised a lot of different startups on their stack and process. Like, what's one question that you wish more people would consider or ask when it came to payments, but they don't?
You mean in terms of merchants choosing a payment stack?
Yes.
I think when merchants want to think about, okay, what's the payment stack I want to use? It's not only about, of course, everybody's thinking of how much is this going to cost me, and authorization rates, payments performance, etc. I think an important thing to also think about is what kind of partnership you get from that payment service provider. Are they going to be your thought partner in designing the offering the right way with you? And how do they play well with other vendors and partners in the ecosystem, such as fraud providers, chargeback providers, etc.
Nice. So you should always be considering as well, not just the cost, but like how you can actually collaborate and work together with the provider.
Like a better together solution for the merchant overall.
To figure it out. Cool. So we are up on time. Before we drop off today, I first want to say thank you very much. It's been really interesting to chat through some of this data. And I'm sure the audience, like I said, we'll leave these in the show notes. Hopefully by the time this episode airs, you'll be able to check it out there directly. Is there any final thoughts you want to leave us with today before we drop off?
I just want to say that, first of all, thank you for having me. This has been an interesting conversation for me as well. The state of subscription reports, it just acts as a benchmark. So I hope all your listeners derive a lot of value from the analysis that we put forth there. We also included a checklist at the end. So if you are a direct-to-consumer brand looking to drive churn down or retention up and drive growth for your business, then there are specific things that you could check for across different categories. So I hope that the listeners will use that as well.
Amazing. And again, yeah, we'll make sure to leave that in the show notes as well. But thanks again for joining, Priya. Really, really appreciate the time and wish you best of luck going forward.
Thank you so much, Andrew. Thank you for having me.
Thanks. And that's a wrap for the show today with me, Andrew Michael. I really hope you enjoyed it and you were able to pull out something valuable for your business. To keep up to date with Churn.fm and be notified about new episodes, blog posts, and more, subscribe to our mailing list by visiting Churn.fm. Also, don't forget to subscribe to our show on iTunes, Google Play, or wherever you listen to your podcasts. If you have any feedback, good or bad, I would love to hear from you. And you can provide your blunt, direct feedback by sending it to Andrew at churn.fm. Lastly, but most importantly, if you enjoyed this episode, please share it and leave a review, as it really helps get the word out and grow the community. Thanks again for listening. See you again next week.